Now, I've been asked about Senseonics Holdings. I've given my views on it in the past. I've actually contacted people who have conditioned it for, and they have said they would prefer the Freestyle Libra, even if it gets approval. You're banking a lot on FDA approval. It's already more than 6x'd since announcement, and people I've spoken to have said Freestyle Libra does the job, and you don't need an implantable device, which means you don't need an operation to put it inside the arm. You just need a sensor placed on the arm, and then you need the reader. So why would you bother with a Senseonics one? And then you're still banking on whether or not it gets approval. You know, so I'm giving it a miss. And then people have said, yes, but Wall Street Bets could be targeting it. There's talks of Wall Street Bets targeting it. So my answer to that is, different one, is Corsair Gaming. We have confirmation Wall Street Bets are targeting this one. So I've spoke about this a month ago and 3 months ago, and Jeremy speaks about it a lot from Financial Education. If you haven't seen his channel, why not check it out? We don't agree on everything, but on this we do. It's a gaming company and a streaming company, and people seem to disregard the streaming side of it, which is huge. And now that Wall Street Bets have confirmed they're going into it, it's shot up, as you can see, to 42, and there's a bit of a sell-off this morning from people taking profits. I've always said anything under $40 is a steal. I will be picking up a few more shares. Look, if you look at the 1 month chart, you can see Corsair is up 11%. Senseonics is up 100%. If you look at the 6 month chart, you can see Corsair is actually again 11%, but you know, to flat, and whereas Senseonics is more than 600% up. Now, again, Senseonics doesn't have the financials. When you look at it, the PEG ratio is 1.66, forward PE of 18, price to sales of 1.73. You know, it's under its enterprise value. Financials, you can see from the balance sheet, you know, 1.3 billion against 845 million liabilities. So it's not in financial problems. It's, you know, it's, I just think if you're going to go for momentum stocks, Wall Street Bets stocks, then at least go for one that's a bit more sensible. Anyway, as you saw, I was looking into a company called Torchlight. Well, I've spoken about them on my penny stocks. Why? They're an oil and energy exploration company, and 22nd of June they will be issuing a special dividend of a Series A preferred stock to be issued on a 1-for-1 basis to common stockholders. Now, that is without any kind of reverse split. If they do any reverse split, then it will be adjusted. But just wanted to let you know how I was in NVIDIA. I'm considering taking profits on my NVIDIA, not on my long-term account, in my swing trade account, because I got in at 600 and now it's gone to 720, and using the profits to put in more in Torchlight and seeing where we go from here. Now, I would like your opinions on that. Am I making a crazy move? The reason why I'm using the profits only is because I think after the split there will be a sell-off, and I want to buy back in. Just like, or it will go sideways, just like it did with Tesla, just like it did with Apple. Now, people seem to be concentrating on the split at the moment, and the thing about that is they're disregarding the fact that the UK seems to be putting a blockade on the ARM acquisition. But if you want to, another way with ARM is Qualcomm. Qualcomm have said they don't mind if the ARM doesn't go through, they don't mind doing a amalgamation whereby they will create a company with ARM in, and ARM will just operate. Don't forget to hit that lovely like button, and don't forget the sexy subscribe button. A lot sexier than me, just ask the wife. And if you want to be a hero, hit the bell notification. You'll be notified when a new video gets uploaded. And why not check out the links in the description below. If you're looking for a free trading platform, you get a free share worth up to £200, depending on the platform you use if you deposit a small amount. And for those of you who are looking for something a bit in between, Corsair and Sensonics, Pubmatic is 50, depending on where you look, is 50 to 55% shorted. There's in the added space like Trade Desk, and it's been growing its revenue 50% quarter over quarter, and I think if you look at how it's doing, its costs stay the same, and what I like about it is it started paying down its liabilities rather than just keeping it as profit. Profit gets taxed. Last year had a huge jump in liabilities because things came due, and instead of rolling them over like some companies, it just started paying them down, which I like to see. Now, with this, I would put a stop loss at 30. You see here, short squeeze, and if it breaks through 40, 45, it could go anywhere. I don't see why they wouldn't target this when they've targeted everything else. I mean, look at this. You can see when the shorts got in and when they kept piling in. Now, it had a lock-up period end recently on the 7th of June, which was when you had a lot of people selling in expectation of it, and now that bad catalyst is over with, you can expect people to start buying into it again, and essentially you're getting it at January's price. Now, don't forget to hit the like button, comment in the box below, and subscribe if you haven't. I'll see you in the next video.